Ahead of India's election result announcement, S&P has upgraded India's sovereign rating outlook to positive. Citing the country's strong economic expansion at the moment, experts forecast GDP growth to remain near 7% annually for the next 3 years. And this outlook is driven by several factors. The government is giving more importance to fiscal consolidation, aiming to reduce the government deficit to 6.8% of GDP by fiscal 2028. Despite high deficits, India's debt to GDP ratio is predicted to decline to 81% by 2028, indicating a gradual improvement in public finances. Also, strong economic growth is expected to have a moderating effect on the debt ratio, even with continued deficits. This economic momentum is fueling investor confidence. The Indian rupee strengthened following the S&P upgrade, and foreign investor holdings in Indian equities have reached record highs. India's ongoing elections have witnessed a record-breaking voter turnout. This exercise is further strengthened by a major rise in female voter participation, with women now outnumbering men at polling stations. Approximately 92% of constituencies polled so far have seen either an increase or a steady voter turnout compared to previous elections. Notably, 250 parliamentary constituencies have witnessed a major surge in voter participation. Regardless of the election outcome, the focus on strategic sectors like electronics and infrastructure is expected to continue post-elections. This emphasis aims to propel India's economic growth and propel it towards becoming the world's third largest economy by 2030. Meanwhile, inflation is predicted to ease in 2024, reaching 5.3%. This decline, coupled with continued economic growth, it presents a positive outlook for India's future. Well, we're talking about how ahead of India's election results on June 4th, the S&P that has upgraded India's sovereign rating outlook to positive, citing the country's strong economic expansion, while experts are also predicting GDP growth to remain near 7% annually for the next 3 years. And this data comes just ahead of the last phase of polling, which is on June 1st, and ahead of the results on June 4th. Well, the government is giving more importance to fiscal consolidation, which aims to reduce the government deficit to 6.8% of GDP by the year 2028. And this economic momentum is further fueling investor confidence at the moment. And to give you some more context, the Indian rupee strengthened following the S&P upgrade, and foreign investor holdings in Indian equities have also reached record highs. And well, for more on this, we're now being joined by Mithali Nikor, economist and founder of Nikor Associates. She is joining us live from Delhi. Welcome to the show.
Thank you so much. Good morning. Thank you for having me.
Right, I want to first start by asking you, Mithali, that India recently touched new market highs. How do you see this from a long-term perspective?
So I think, at this point in time, what we're seeing is the culmination of a long-term trend of market making in India. There is a huge difference in the people who are participating in equity and debt markets in India today compared to 10 years ago. Because today we have so many more first-time investors venturing into equity markets. We have smaller buyers of equities and stocks. So I think today the market's character has completely changed. And over the next decade, I definitely feel that there will be an emergence of a new class of equity investors. Women equity investors will also come in, and medium-sized equity investors will come in, which will, add a lot of rich flavor to the equity markets.
Right, Mithali, thank you so much for joining us on World Business Watch with your insights on this.